Welcome to XM.com for this Forex Preview video. I'm Cristina Marujos. Joining me today is investment analyst Cristina Barcenido, and we'll be having a look at the Reserve Bank of Australia, which meets early on Tuesday, Cristina, amid hawkish market speculation that it will raise rates at least 3 times in 2022. However, it looks like that may be too optimistic, especially with the Omicron variant causing such turmoil around the world. Therefore, what are we likely to hear from policymakers at this meeting?
Hi, Christina. Indeed, investors seem to be still way ahead of the central bank at the moment, pricing 3 rate hikes, as you said, and even a 4th one for next year at a time when the RBA has been clear enough that it's not planning to raise borrowing costs for the next 2 years. It has also said that its bond purchases will not diminish further until the tapering phase comes under review again in February. So, given the minutes from its previous meeting, expectations are currently very low for any changes in monetary policy. Also, unlike other key economies, Australian inflation is still within the central bank's 2 to 3% range target, and the core measures are even lower at the bottom of this range. So this could be another excuse to keep policy settings steady and accommodative, especially as the effects of the new Omicron variant and its resilience against the vaccines are still unknown, keeping the scenario of more lockdowns measures open for now. On the other hand, however, there is little reasoning to believe that inflation may slow down in the coming months. Of course, the 2020 full lockdowns caused a steep slowdown in global growth and therefore sharp declines in prices. But currently, the background is different. Economies use only partial lockdowns, which allow businesses to operate almost normally and consumers to shop. The problem here is that demand is still strong, but there are not enough workers to keep production move normally and to meet that demand on time. So that is causing some supply constraints, which consequently cause inflation pressures. And the Omicron variant could only worsen those imbalances, creating more inflation. So the question here is how central banks will move forward from here. Last week, the Fed chief had almost admitted that inflation is looking now more persistent and the word transitory should retire. Probably he tried to explain that the word transitory doesn't imply to a short-term phenomenon, but to whether inflation will create permanent scars in the economies. So in any case, his latest speech suggests that the US Central Bank will probably use a more hawkish tone during its December policy meeting. And what remains to be seen now is whether other central banks will follow suit. Well, for the RBA to hike its interest rates sooner than later, wage growth needs to rise above 3% according to its previous policy statement, which currently is not the case. But given the persisting inflation pressures elsewhere and the smaller than expected damage from the summer lockdowns, I would have ruled out some hawkish twists in RBA's language. For example, it could become more precise about how long bond tapering will continue and generally show more willingness to move policy tightening at a faster pace.
Now let's have a look at the Aussie, which has had some rough weeks lately, and the slowdown in China has further dented its strength. Can the Reserve Bank of Australia provide the currency some support this week?
Well, if it indeed uses a more hawkish tone, justifying at least a 1 rate hike for next year, then the Aussie could recoup some of its sharp losses against the US dollar. There is currently strong support around the 0.6990 level, so that could be a potential pivot point and an opportunity to bounce back towards the 0.71 level. Now, if the RBA disappoints investors, reiterating that rates will not change in the next 2 years as the Omicron variant is only worsening the uncertainty around the pandemic situation, then that could push the Aussie to fresh lows, probably around the 0.69 psychological level. Nevertheless, the RBA has been occasionally surprising markets over the past 2 years, so let's see how things will turn up for the RBA tomorrow.
We will definitely be keeping an eye on that. Cristina, thank you for joining me today, and thank you for watching this Forex Preview on the Reserve Bank of Australia meeting coming up on Tuesday here at XM.com.